Hey everyone, welcome back to Your Trader Sam. What I want to do today is I want to look at high time frames on the Bitcoin chart, and I want to look for areas of confluence, and I want to do this while using the object tree. So what I've found is the object tree is a great tool just to keep you organized and to make sure that you've gone over everything and done your due diligence when looking for zones in the charts to take positions from. Rather than writing it down or having to memorize it in your head, by using the object tree, we can systematically go over every single different thing that we want to be looking at in terms of, daily levels, weekly levels, monthly levels, fixed range tools, Fibonacci levels, MPOCs, channels, harmonics, everything of that nature, all the good stuff. So I want to show you how I do it. So let's just start off. We'll go from top to bottom. So let's look at MPOC levels that we've currently got on the charts. Okay, so we've got these levels here. Let's have a look if we've got any channels. So we have a parallel channel here from the high put in the 14th of April, and then the lows put in around the 16th of June. We can form this horizontal channel, and you can see it's been well respected. It's been respected over here from the 23rd of June all the way up until the 14th of July, where we got that rejection, and we proceeded down to the middle of the channel, and actually we sliced straight through that, and we found support at the previous low from the 16th of June. So that channel is going to be, you can see it's been quite well respected at the 50% level of the channel, where it's been a support and resistance level. So let's leave that there for now. Daily levels, we've got these daily levels. So basically, for those of you that don't know, we call these naked levels, right? And what they consist of are openings and closings on the daily time frame. So I just want to give you an example. So you wouldn't classify this here at 26,189 yet as a naked daily level, because the current day session that we're on right now has not closed. So when that closes, if that were not to be tapped once again, we could mark that level off as a naked daily level. And these are important levels on the charts where price is often well respected. So as you can see up here, I only have them in places where we have open and closes, where the price has not yet come. I'll just give you an example of when not to put one, so that you're on the same page of what I'm looking at here. So for example, over here, you wouldn't put a daily level there, because you can see this long wick here. The price has already has come up and claimed that level, right? So we typically put them there. And you can leave, when price goes through that level and it's already on your charts, you can typically leave it there for a back test. But after you get a back test, you're pretty much going to move it off your charts, because your charts will start to get quite messy. So we've got that daily level here at 26,600 approximately. We've got this MPOC. Let's look for weeklies. So obviously when you're looking at weeklies, you'll need to change to the weekly time frame as well. So as you can see up here, we've got a bit of confluence already with this MPOC and daily. This week has not, obviously, it's just open, so we have to wait to the end of the week to see if there's going to be a new level around this zone. To the downside, we do have a level here which we can mark off. I could add that one in down the bottom, but I'm not expecting price to go there anytime soon at 17,000. It may never go there. So for the purpose of this educational video, we'll just keep it a bit more brief. Monthly levels, we're going to have to change to the monthly time frame. You can see we have one down there at 23,133. We have one up here at 30,463. So just to reiterate what I said earlier, we wouldn't put one here at 31,784 because as you can see, prices come up to claim that level already. Okay, a lot of these I've already put in just to, save time. I won't worry about looking at the 3, 6, 12 months for now. So let's look at fixed range. Okay. So as you can see here, guys, where prices slightly front ran this monthly zone here at 23,130, there's also a value area high there from the previous range, the last lower high put in of the bear market. That range that we had from June 13th all the way till March 12th, you can see that prices come down and it's hit that value area high and it's bounced. And so there is a bit of confluence here with this value area high and the monthly level. There's also, from memory, I will just, where has that gone? I'll have to draw it up again. So we also had the 0.5 Fibonacci level, which coincides with the value area high, where we got that massive bounce from just recently. So you can see, guys, as you start to go through your object tree, you start to build up zones of confluence. And they're obviously areas in trading, areas of confluence are the most important zones that you want to be looking at on your charts for a possible reaction. So what else have we got? We've got SFP levels. So SFP levels, guys, are pivots on the charts, these major pivots where price changes direction, and price will often come down and test these levels, making people, for example, if it was coming down, people would be getting extremely bearish and shorting the lows. It's a common occurrence. And then for an SFP zone, like right here at 24,689, you'd be looking for price to get acceptance. After coming down to breach that zone, you'd be looking for price to get acceptance back above it, trapping lots of aggressive shorts, and then seeing a subsequent rise to the upside where you can capitalize on that. So for those of you that don't know what SFP zones are, that's what they are. So these pink lines that I have, they're SFP zones. So we have a third touch or a 3-touch setup, which could potentially be at play here, which is basically, this works a lot better on higher time frames, but it's where you have a pivot like our SFP zone and price comes down, hits that zone, so we've SFP'd off that zone, and then once you have the 2 touches in play already, you can add them together from the first pivot low to the second pivot low in a horizontal line, and you can be waiting in anticipation for price. If price gets to that zone again on higher time frames, when it does hit that zone for a third time, you can be looking for a strong reaction for price to get a reversal, right? So if price, for example, trickles down here and hits this zone, we could be looking for a potential bounce. That's called a 3-touch setup. It's a common occurrence for Bitcoin. If I've done loads of back testing on this. If you look back in the charts, you'll see these these 3-touch setups playing out quite often. So as you can see, there is confluence here now, because this is where we started off. If you remember, we had a horizontal channel here. That horizontal channel is also an SFP zone. We've got this MPOC, which is close by. If we go down to lower time frames, if we connect this pivot low to this local pivot high just here, you can see that the 618 region, the golden pocket, coincides beautifully with this 3-touch setup, which is bang on. I'll just zoom out a little bit for you. Which is bang on this horizontal, the support level of this horizontal channel. So as you can see, guys, as you start to add up, things from your object tree, you can see the confluence coming into play. There's no current harmonics at the moment. Channels. No channels at play. Fibonacci we've already looked at. Trend lines. Okay, so you can see, I'll zoom out a little bit more here. I'll get a few things off the charts as well, because it's getting quite messy. So you can see here, guys, this fixed range over here, from this massive, sideways. You can kind of call it sideways on higher time frames, but this massive value area that we have up here, the point of control, and this upward sloping support trend line, you can see how where price broke through with extreme volatility was right at the point of control and the break of that trend line. So yeah, you can just see how confluence starts to add up here. Now, this is not a video about giving predictions. That will be for another video. But this was basically just to run you through the importance of using object tree and how you can really use it. And I'll give you an example. You can use it, for looking at trade setups. So I gave you that example before, how we had the MPOC down here, the 618, and it's obviously a 3-touch setup and SFP, etc., etc. So for a long, for example, and I'll go into way more detail in the next video where we're looking for setups, but just for the purpose of this video, if I were to look for a long, my next level of interest would certainly be right here at the 618 and bottom of this channel, and we had an MPOC level there as well. It's a 3-touch setup. So that's how you can use it, guys, to find yourself confluence. And it's just so great. I have to reiterate the fact that it takes a lot of stress off your shoulders. It makes things systematic. You can have a systematic approach where you can come in and you just have your checklist there, and okay, I need to look for trend lines. I need to look for dailies. I need to look for weeklies. I need to look for monthlies. I need to look for fixed ranges. I need to look for harmonics. Because if we don't have this here, we won't remember, because there's so many things to go over. A lot of the times, I know for those of you that a bit more experienced, you'll certainly know when you're looking back and you're journaling what you've done, where you've gone wrong, what you could do better. You'll always shoot yourself and be like, shit, I missed that. I missed that harmonic pattern. I missed that channel. I missed that daily level. That's why price rejected there, that SFP zone. So this is really going to eliminate that. It's going to get you super organized, guys. Also, if we were looking for shorts, for example, so let's just have a look if we can find a bit of confluence for shorts. Let's have a look at the fixed range. Okay, guys, so as you can see, I've taken from this pivot high up here, where we got rejected at the value area high. I've taken a Fibonacci pull down to the bottom here, and the 618 retracement is exactly pretty much at this point of control. So there you go. There's another area of confluence that shall price get up there. That's going to be a major zone of resistance. You can see the spike that we have here from the volume traded between, these dates here mentioned before. So that's going to be a massive level. Also, the 0.5 Fibonacci, as you can see, I'll just zoom in for you. The 0.5 has to be respected because we have this. This is a range here, guys. Look, I'll just show you quickly. This is a range. That we are currently in, right? Now, that is, this gray line here is a 0.5 Fibonacci, which I just showed you before. It's just, yeah, you can see it there. Now, if price were to come up here, slightly get past the 0.5 and SFP, and obviously hit the top of this range and SFP. So you know what an SFP is. I just explained it to you before. If price were to come up here and then close beneath here, and we were to see some bearish CVD divergences, and looking at the order flow, and don't worry guys, there's going to be lots of videos explaining what CVD divergences are and order flow are, etc. But basically, if we were to see these bearish factors, confluences coming together, we would take the short. But a high probability trade. So there you go, guys. Just a quick explanation of how you can use the object tree to find confluences in the chart. Thanks for tuning in, and I'll catch you on the next one. Peace and love. Ciao.